So back in 2017 December, the world saw the largest bullcoin. Back in December 2017, the world saw the largest Bitcoin bull run. Bitcoin hit a high of $17,000 and the world went crazy and FOMO started. But in 4 months' time, in April 2018, Bitcoin plummeted $6,800 and that constituted to a 40% dip in prices. And in November 2018, it went down to the $3,000 range and it stayed there till May 2019. Then it went on a sideways movement until September 2020 where the bulls came in and pushed the Bitcoin to its all-time high of $63,000. But today, in May 2021, we are sitting at a price point of about $40,000. The crypto bull run has made millionaires and also destroyed many families as well. When people put their hard-earned money into investments that they don't understand, some make it big and some don't even survive it. During this bull run, I learned quite a few things that I feel everyone should know as well, so you'll be better equipped and be able to manage your finances better. Because in the previous bull run in 2017, I thought Bitcoin would go to 100k by the end of 2018 and the opposite happened. But nonetheless, these don't just apply to bull runs but can be also used in stocks, bonds or whatever other instruments that you're using. Ultimately, knowing how to manage your money is a skill that everyone is learning and perfecting as we move on in life. So before we begin, this is not financial advice, it is my own experience of how I'm managing my money and hence it might be very different from what you might want to do because we are all different in one way or the other. But the first thing that I learned to do is to always take profit. One of the hardest things to do is knowing when to buy and the next hardest thing to do is knowing when to sell the coin, token or the stock. Questions will be like, do we sell it at 50% gains? Do we wait for another 2x? Do we sell 50% of our holdings when we 2x? And we leave the rest to roll, or what should we do? So when I first started trading and investing in crypto, I always let my emotions get the better of me, knowing I bought a token at a low price but not knowing when to sell. Because the thought of what am I going to do with the money comes to my mind and it scares me a little. However, in the recent bull run, I realized that I could have done a lot more with the money that I've taken profit with if I've done this way back. Like if I put my money into an ETF earning dividends during the crypto winter, I would have learned a lot more money. So always take profit. So here's my formula for taking profit. When I put in $1,000 into a token and the value becomes $2,500 after a period of time, I'll take out $1,500 and leave that $1,000 there to grow. So with the $1,500 that I've withdrew, I'll find the next investment to put it in, and more often than not, if there is none, I will just put this into something like BNB Vault or BlockFi to generate interest while I wait for the next opportunity. So links to this platform can be found in the description down below. So let's say even if you don't buy anything but cash out the $1,500, at least you have secured your capital and also earn a 50% of realized profit. And by pressing the sell button, which might be very hard to do, but we're all here to realize some profit, and when it's time to do so, we're able to take the money and do something with the money. So for example, you could buy a nice dinner, you could buy something new for yourself, or the bag that you've always wanted, or if you make it big, you could buy that Lamborghini. But one thing to know is to never fall in love with your tokens, as they are just vessels to earning an income, and always remember to take profit when possible. So the second lesson I learned is to always have a plan for your money. So this doesn't only apply to crypto but also to stocks, bonds and any other investment as well. So having spare cash lying around might not be the best thing to do, as it might only reduce your buying power over time. And because I'm still working, I know that every month I'll get a fixed set of income coming in and I know where my money is going, how it's going to be utilized. And from there, I'm able to gauge my yield in percentage as well, which allows me to then visualize which of my investments are paying me better and where am I spending most of my money, and it also allows me to make plans if I have an upcoming bonus or increment in salary. But some of you might have this question in mind like, hey, no, I don't just want to have safe investments but I want risky ones as well. So if you're into the risky or high risk instruments, one might consider having a small account set aside to do such investments and to put aside your money every single month just for this high risk investment. But whatever happens, always have a plan for your money, because failing to plan is planning to fail. And once you have that plan in mind, what you need to do next is to really stick to your plan. Like, really stick to the plan. Do not deviate. So when I was learning about the stock market, I lost money because just that one time when I was trying to play options because someone said it was easy passive income, and passive income comes very quickly. Boy, I was wrong. I was so damn wrong, because with limited knowledge about options, I just decided to follow a call made by a trader, and I bought a Twitter call option. But that week, Twitter started sinking and I ended up losing like $600 in less than a week. And that was the most stressful week of my life, because I would wake up, look at my P&L, and I had like, oh gosh, what am I in? And because I just started investing, $600 was quite a bit to that portfolio. And back then it was like maybe 20-30% of it. I wouldn't recommend you doing that. But even now, if I have not lost that money, I would have been able to get a little bit more dividends coming into my pocket right now. So what you need to do right now is to draw a plan of how and where you're going to spend your money, where your money is going to go to, and look through it, think through it, make sure it makes sense, and then stick to it. Like, really stick. So that when an opportunity strikes, you're able to reevaluate, weigh the pros and cons before switching up your plans as well. Last but not least, don't FOMO. Do not ever FOMO. We have all heard it, do not FOMO or have the fear of missing out. This happens when we see people getting good gains and we don't want to miss out on this good opportunity of a lifetime. And I'm guilty of this as well, and I've bought many types of strange coin that I forgot about and ended up losing the whole thing. So for example, in the recent meme coin era that passed a couple of weeks back, I bought a coin called Laika. A dog kind of coin, and it was something like $0.000000001 or something. And I saw on social media, I saw people shilling it. I put some money into it, the coin started growing, but the problem with these coins is that it takes a 8 to 12% slippage fee, which is then used to be distributed to token holders. So I was up like 10-15%, and selling would mean that I took a loss because the slippage fee is 8 to 12% already, excluding transaction fees, and thus I decided to hold. And sure enough, I was getting tokens, like a lot of tokens, and probably a week later I realized that the tokens were worthless because the project closed and I ended up getting a rug pull. So in a rug pull, developers or the coin founders just close the project, take the money, and they leave. But I'm not saying that by doing research you could mitigate these risks, because most of the coins in the crypto space do not have fundamentals to begin with. And hence, that's why allocation to crypto should only be at a minimum and do not over leverage yourself in the crypto space. So that's all for today's video. Smash the like button if that's what you're into. Share this video, share my pain, share your glory, and subscribe. And I'll see you in the next one.